You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Welcome, everyone. My name is Dan Weiskopf, and today we are here on the Blockchain CEO series with Adam Sullivan, CEO of Core Scientific. Adam joined as CEO in August 2023 and brings great experience to the company in that he was both a consultant in the industry and a banker to the industry. On today's podcast, listeners will learn three things: the vision of Core beyond just 2024 in AI as well as Bitcoin mining, how the firm is positioned for the halving, and third, how Core's $500 million in 2023 revenues gives it a competitive advantage over the other larger miners. Adam, welcome. Thrilled you could join us here today.
Thank you, Dan. Looking forward to that.
For our listeners' benefit, you and I met on one of those many road trips, the bus site tours. I think it's about 2 or 3 years ago, while you were consulting to, I think it was Argo, or maybe it was Riot, or maybe, a private miner. What's it like going from consulting to banking to actually running the business?
It's been an interesting journey. When I first came into this industry, I was running machines myself, and actually having the opportunity to work with many of these companies when they were in their infancy, looking and thinking through how they were going to fund the business initially, how they were going to structure their sites, how they were going to hire employees versus acquiring teams. That whole process from really going from what were some of the larger sites in North America at 5 or 10 megawatts to where we are today, and just being a part of many companies and watching that growth to now, the smallest sites. I remember in 2021, people were saying 200 megawatts to the smallest site. I remember sitting around a table with a bunch of miners in 2018 going, oh my gosh, is 20 megawatts going to be the largest site in North America? And, flash forward 3 years and suddenly, now we're talking about 200 is the minimum size. And so just being really heavily involved with all these companies, thinking through strategy, thinking through diversification plays, thinking through acquisitions, it set me up very well to join Core Scientific as we had to plot a new path, for 2024 and beyond. So I'm really excited to be in the chair I'm in today, and I'm surrounded by an amazing team.
Yeah, you just said the magic word, I think, team. We at Tidal really believe that culture matters at a company. I mean, we look at ourselves, we're about 55 people, maybe 60 actually now, which is not a lot compared to your company or, Core Scientific, but culture matters. How do you formulate the right culture? Given the history of the company, as well as you being the new guy coming in just about 13, 14 months ago.
Culture is incredibly important. We were an aggressive growth company from the day that we began mining in January of 2018 to, really through 2022 when, things came to a bit of a halt in terms of our aggressive growth strategy. I came in the middle of 2023. We were going through a tough process then. And it was about plotting a new vision for the company and taking that aggressive growth business and that all of those employees that were part of, really the most magnificent build process of digital infrastructure our industry has ever seen, building over 700 megawatts in a very short period of time, refocusing them was really important, making sure that we had goals that we could achieve through the difficult period of 2023. And we did that, right? We improved our efficiency through that entire process. And, coming out in 2024, once we went public, we were able to chart a path that really leads us up to 2028, which is the next halving for Bitcoin mining. And, having these goals, setting aggressive growth goals for us that fit within our business plan, that's what people can rally behind. The development of new business lines, that's what the team gets excited about. And so, today we have a team that's absolutely excited to perform extraordinarily well in 2024 and beyond. And you can see that in our numbers, right? We have less exahash online than some of our competitors. we're mining a lot more Bitcoin than them.
Yeah, I love that you brought up 2028. Everybody seems to be focused on 2024, and this having, coming up. But, this is a business where you really have to think far out. I guess my question would be, looking at the KPIs that you live with right now, what KPIs do you focus on today that are going to be important in the future, like when you're talking about 2028?
Yeah, 2028 is a time period where we're trying to estimate what is going to be profitable in Bitcoin mining. Infrastructure is a 3 to 5 year game, meaning if you want to change your infrastructure footprint, it's going to take 3 to 5 years. In the given environment that we are in today around electrical infrastructure, that's potentially a 5 to 7 year game, depending on when you can get power allocations and when you can even get substations. So from our perspective, how we think about each of our sites is, how high can we get hash rate utilization? Essentially, how much hash rate can we get out of the facility, given power contracts, given our ability to flex power, and really one of the most important metrics is how low can we bring the power prices? And really, lower power prices come from greater intermittency, so essentially greater downtime. And we have to know, based on different levels of intermittency, what our power price is going to be, because that affects our strategy, right? So we've been actually bringing new machines online. We've been bringing XPs online, S21s online. And what we've been doing with our older generation units is actually moving them to locations where we can really choose our power price, but then we're told the uptime. But we know what the efficient frontier is for maximizing profitability. And so you kind of need that entire fleet mix within your portfolio to be able to optimally run machines for 4 to 5 years. You're able to extend the life cycle, maximize profitability. So for us, we're making sure that we have the right mix of facilities in our facility base today, but it's also been driving some of our decision-making around the conversion of certain facilities that we own, where we believe, they might not be as competitive in 2028. And so we're making the conscious decision today, early in 2024, to actually start shifting infrastructure to fortify our Bitcoin mining business in 2028. Because if you wait until 2028 to make a decision around what's going to be profitable, you're just way too late.
Adam, you nailed it, because there's so much excitement, maybe hype, around the halving that's coming up, I guess, April 19th, 2024. Well, if you're not prepared yet, you're not going to be prepared on April 20th. So we'll see what happens with a lot of folks. My question to you would be, what have you done to prepare for the halving that's coming up now, and where do you see like your break-even costs in the context of all the metrics that you look at, right? If Bitcoin was at, we'll say 60,000, are you still profitable?
Yeah, let's talk about what actually occurs at the halving. So at the halving, the block reward gets cut in half. You've essentially seen this happen not only before previous halvings, but in 2022, network hash rate double, which is essentially the equivalent of a halving, right? And so we think about it as the stance we need to be as a company at all times. And so what we did over the course of 2023 was target 3 main areas: operations, software, and energy. We'll start with operations, right? We've been adjusting our machine fleet by adding new machines, newer generation units. But the bigger part of that story is that we have the facility base where we have different style power contracts, where we've been able to reallocate the machines to maximize profitability and keep those machines online at a lower break-even hash price than if they were all on one single power contract. And so that's been a very interesting dynamic and a competitive advantage, frankly, that really only we have given our facility base. The software side is incredibly important. We talk about this often, but we're the only company that built all 3 levels of our software stack: fleet management, energy management, and our own firmware. And so we're actually able to dynamically tune based on mining economics. So wherever hash price is, that feeds into a model that goes against the power contract at that site. And it tells us not only what power contract or what type of programs we should participate in, but also what level of joules per terahash that machine should be running at to maximize profitability. And so we can run high power mode, which essentially increases the terahash, but increases the power a little bit more. Low power mode, which reduces the terahash by a certain amount, but it reduces the power draw by even more, allowing us to operate more efficiently. Then we have a super low power mode that, drops the terahash even more than the previous mode, but it drops the power very significantly, essentially moving the machines up an entire generation. And so from our perspective, we've been able to set up very well from both the operations and software side. And then on the energy side, we've been working really closely with all of our utility providers and in the deregulated markets to identify what are the most profitable power contracts that we should be, or power programs that we should participate in, and what are our available options if mining economics decrease significantly. So we put out our projections around 4.5 to 4.7 cents per power for this year, but that's based on where our view of mining economics are. We have the ability to flex a bit lower if mining economics become more challenged. And so from our perspective, we've set ourselves up very well, not only for this halving, but for any future downside volatility event that could occur in our industry.
So you threw a lot of verbiage at us here. So hash rate means what?
Hash rate is the amount of compute being applied to the Bitcoin network.
Okay, good. No, I've got a different audience than some folks. I just always think that definitions are important for everybody, and I want people to understand what all that means. So cool. Along those same lines, I wanted to just take a step back. You speak about being the biggest. Put that into some kind of scale so people have an appreciation for what that means being, the biggest, and your vision for that.
Yeah, so what we mean by the biggest is, really two areas. Most numbers of Bitcoins mined and largest infrastructure base. So largest available machine slots, essentially, to plug in new machines. On the most Bitcoins mined side, it's a metric that we've led amongst all publicly traded mining companies since 2021. We've led it each year, and we've mined many thousands of more Bitcoin, tens of thousands of more Bitcoin than most of our competitors have. And so it gives us a dramatic advantage when it comes to going into moments like the halving, where we're going to be producing a significant amount of operational free cash flow, where even if capital in this industry does dry up, we're producing so much free cash flow that we actually are in a very strong position given the number of Bitcoins that we've mined. This goes right into 2024, where our facilities operate at much higher hash rate utilizations than our competitors, which means when we have less exahash online, or the amount of compute power being applied to the Bitcoin network, we're mining more Bitcoin because we're better operators than our competitors are.
Well, you used a term that I can really embrace: free cash flow. People don't talk about free cash flow in this industry. How does that come about?
How does free cash flow come about?
How does free cash flow come about? I am serious in many respects, because free cash flow will occur because you're operating efficiently and you're managing your OpEx. Not everybody's doing that the same way, right? Because they have ATMs outstanding and they're printing stock faster than they're printing Bitcoin. Is kind of like my running joke. And having said that, having access to the capital markets is hugely important in this industry. But nobody talks about free cash flow. But you're talking about actual free cash flow.
Yeah, we're a big business, right? Like, there's going to be a point in time where our competitors who are funding all of their cost of revenue and all of their operating expenses out of diluting shareholders, that train will come to an end. And then that's where the rubber's going to meet the road, where it's going to come down to those companies actually having to be good operators. And, they're going to have to make a decision at some point. Are they actually going to focus on operations, or are they going to be focused more on being essentially an equity capital markets business? For us, we're hyper-focused on producing actual free cash flow and levered free cash flow. And so from our perspective, we need to be maintaining a very consistent margin on our levered free cash flow to support the long-term sustainability of our business. And so that's led to some of our discussions around some of the movement of our infrastructure to more of a traditional HPC environment, because those turn into long-dated, very stable, and high-margin businesses that can help sustain our business through the highs and lows of Bitcoin mining. Because we're one of the best Bitcoin miners out there, and it's very hard to sustain through some of the lower parts of the cycle, because the cycles seem to always find the pain trade for this industry. And our goal is to be, sustain ourselves through even the lowest lows of this industry. And what that means is we need to be hyper-focused on producing consistent levered free cash flow.
Love it. So, can I ask you a favor? I love when you talk about stability of your business. I do check every day how many Bitcoin you've produced, and I find it very, very consistent. And can you do me a favor and just make it super easy and just make the clock so it's daily and then cumulative Bitcoin? I listen. I know some of your competitors may get angry about that ask and you doing it because they won't be producing as much Bitcoin on a cumulative basis. But I just think for the market, it might be kind of fun to see.
Yeah, we might be taking away some Twitter folks who seem to be running a daily counter for us versus Marathon. But yeah, that's something we would consider for you, Dan.
Thanks. So when I look at your infrastructure, I may be making an assumption that it's easy, because I know it's not easy to build out the infrastructure that you guys have built out. And I know that because I see that in some of your competitors and how they struggle. Talk to us a little bit about your international expansion opportunities, if they do in fact exist, how you look at geographic opportunities here in the U.S., because one of the things that we find interesting about your model is that you're in multiple states.
Mm-hmm.
So I guess my question is, where else might you be opening up or looking at? What other states and global opportunities are you looking at?
Yeah, I would say let's start with the United States first. So we're operating in 5 separate states. I mentioned them earlier, but we chose those states for very specific reasons, to diversify our power risk. You have to diversify your power risk for many different reasons, but each regulated utility has a different strategy around managing their forward natural gas exposure, as natural gas is a critical part of all of the grids in the United States. And they also have different load bases. And so from our perspective, we want to make sure that we don't have too much concentration risk to any single regulated utility. And then we obviously have our Texas sites as well in the deregulated market of ERCOT. And so from our thought process, the way we think about diversification is not only power, it's also environmentals, and it's also regulatory. So not being overly exposed to any given single state. We've done that very well. It's aided us in the process as we've seen power prices move around across different states and across different utilities. But for us right now, really, with the 372 megawatts of partially developed infrastructure we have in ERCOT, that comes at an average price of about $200,000 a megawatt, which, to put into context, the average greenfield project costs anywhere from $500,000 to $750,000. We have a massive organic growth opportunity just with our existing portfolio. But as we start to think and look internationally, there are pockets of power, I would call that on the lower size of the scale, which are incredibly interesting. Now, over time, those power prices will eke up as the demand increases, and you're essentially taking away the surplus power in those regions. But those are opportunities that we're definitely interested in. I would say the biggest challenge right now is Bitcoin miners are not the only people competing for power. All forms of compute are finding surplus power all over the world to try to produce as much compute as possible. The world is getting eaten by compute, essentially, where compute is being produced everywhere in the world to help run essentially every country on this planet. And so the compute is absolutely necessary to fuel the future growth. But we're competing against a lot of different industries right now to try to find that power.
Yeah. So tell us a little bit about equipment these days too, right? You're probably testing different equipment. I know that Bitmain is a shareholder, but they're a small shareholder and they made an economic investment that's probably going to work out really well for them. You've got to be pretty open to testing at other equipment as well. And where are prices these days?
Yeah. So to put it into context, we've run over 800,000 machines in our facilities. Most companies are plugging in machines for the first time in each of their facilities. That's a really differentiating factor for us. We've also tested over 16 different manufacturers of machines for this industry. And so we're absolutely performing research and development on all machine manufacturers, including the new machine manufacturers that are coming out. We're also testing, can we hook up different types of cooling apparatuses to these machines to figure out if we can eke out better performance. That's been a big push for us is, we're always pushing the boundaries of both air-cooled and other styles of cooling for these machines. And machine pricing today, we announced 2 purchase orders. One was a large purchase for XPs that was part of our emergence plan for our go public in January. And the other one was a secondary purchase for S21s. Now, where machine pricing is today is high from our perspective. It will require a very high Bitcoin price post-halving to make up for essentially what is a network difficulty that will stay relatively stagnant. The network difficulty is how hard it is to mine a block. And so from our perspective, we're going to be very opportunistic post-halving. We believe there's a number of marginal operators out there that are going to really struggle. That's going to cause an influx of machines in the secondary market. And it's also going to cause some folks who have announced very large purchase orders for S21s who only place their deposit and still require another 80% of payments. Some of those are going to start selling off some of their allocations that they've paid for to other miners because they have to essentially get enough cash on balance sheet to be able to finish out the payments for other parts of their order. We saw this in 2022. This is not a new playbook that's being run. This is exactly what occurred in 2022. And the exact thing happened where the machine market got flooded with machines and the price per terahash, or essentially the price per measure of compute, plummeted. And so what we're looking at for 2024 is a really strong opportunity to actually purchase a lot of machines once we get to a more stabilized price environment for machines, which is really going to occur probably about 3 to 6 months post-halving.
Yeah, as confirmation of that, I would say I've gotten 4 phone calls of late of private companies looking for money. And a year ago, I wasn't getting those phone calls. So yeah, I know you're correct on that. So are you also looking at immersion as well as air cool?
Yeah, so we've evaluated a number of different immersion styles. Today, all of our facilities are air cooled, either passive or forced air. And so we found our ability to run forced air facilities in the Texas markets where really temperatures can get above 100 for 100 days a year. We found that forced air can essentially allow us to operate up to the similar levels that immersion tanks run in. And so from our perspective, we've been able to achieve similar results to what people are achieving in immersion with forced air cooling in some of the harshest environments in the United States.
And it costs less to build out air cooled than immersion. Immersion's more expensive.
Significantly less expensive. In some cases, almost about half as expensive as the immersion build-outs.
Yeah. Well, also talk to us about underclocking and overclocking. I'm not sure everybody understands what that means.
Sure. So you think about if you think about a race car, right? You can essentially tune that race car to drive a lot faster, but it's going to consume a lot more gas or a lot more miles per gallon. You can also tune that to a greater efficiency where it might not be as fast, but it has a much higher miles per gallon. That's a similar concept here with a machine where we can operate it at a much higher output, a much higher terahash per machine, but it's going to consume more power. And so on a pro rata basis, so you're essentially going to be moving that machine from, let's take a 30 joule per terahash machine to maybe 33 or 34 joules per terahash, but you're going to be increasing your total terahash or your total compute power output by 20% or 25%. Now the reverse goes for underclocking, which is, making that car more efficient. And so for us, we can take machines from, 30 joule per terahash machine down into the mid 20s in terms of joules per terahash. It will also bring down our total terahash, however. But from our perspective, based on the power economics, we can increase profitability by making that move in our efficiency. And so it's profitable to be able to be dynamically tuning machines at all times based on mining economics and current power prices.
But that also affects the life cycle of machines, right? If you are switching on, switching off, you have to, and that must have something to do with your software too, to be able to do that.
Yeah. So it actually elongates the life of these machines, right? Because you can run them in environments where mining economics might have said to the rest of the market, this machine isn't profitable anymore. But for us, we can run that machine for another year or 2 years and generate a lot more profit than if we just went into the market and sold it to refresh that machine. So it's a huge competitive advantage for us. And it's really hard to understate, how big of a competitive advantage it is, because we're such a large operator running over 200,000 machines that for us, we're going to be able to generate a lot more profitability just by moving those machines within our portfolio and eking out an extra year or 2 years out of these machines on our competitors. It just improves our return on every dollar that we invest into this company.
So I know accounting's boring to some people, but not so much to me. Depreciation and amortization on this equipment affects the income statement, or at least the cash flow statement of a lot of companies. Are you a 2-year depreciator or 3-year, 5-year? How does it all work? Because obviously, if you've done accelerated depreciation and then the equipment is still useful beyond that, it leads to great economics.
Mm-hmm. Yeah, I mean, from our perspective, it's about lining up depreciation with what we believe the depreciation of the machine will be. The other part of that is, though, you have to be cognizant of the fact that certain machine generations have actually had much shorter life cycles than others. The S9 is a great example. It had essentially a 6-year life cycle in the market. But then you take the next machine generation, the S17, and it essentially had, a 2.5 to 3 year life cycle because it was immediately trumped by the S19. And so it's interesting, the market is actually moving towards, I would call it, much more or much lower gains in efficiency over time. And so we're reaching a point now where machines are going to be able to stay online much longer than they ever have in the past. So, the way we view it is, taking a 3-year depreciation on our machines, and hoping that we get to a point where we can run that machine for 4 or 5 years.
That's great. So, okay, now that we talked about Bitcoin, let's talk about AI, because that's a relatively new business for you all, but it lines up very well with your expertise. First, give us some context about what you announced with CoreWeave, what it means, at this point in time, and then beyond the CoreWeave deal that you announced, what it might be when you're starting to talk about 2028, et cetera.
Yeah, so we announced our first deal with CoreWeave. It was a 16 megawatt deal. Given our team's experience, our operations team is mainly from the traditional data center industry. And in fact, the facility that we took the master lease on for this first deal with CoreWeave was a facility that many people on our ops team actually used to operate. And our team was involved in the original design of that data center when they previously worked for HP. And so we had a tremendous advantage in terms of understanding that facility and what its actual capabilities are. And so we signed this first deal with CoreWeave, taking advantage of the fact that the demands for AI are not the same as the traditional tier 3 data center industry. And so we've actually been able to increase the power usage of that facility and fit it to the needs of CoreWeave. Now, going forward, where the opportunity is for Core Scientific is that we have facilities that meet all of the criteria of a traditional data center. And so we have low latency to major metropolitan markets. We have, all of the high voltage equipment already ready to go. And given the constraints in this industry where power is not available for at least 3 to 5 years, we have a massive lead time, and we have an opportunity ahead of us that we can execute on that will provide a significant amount of free cash flow to our business. And so we talked about this a bit on our earnings call, but we're negotiating with about 5 parties today, all of which have the capability to pay for the CapEx for these conversions. And it's a really interesting opportunity for our business today, because those sites where we would look to make the conversion, it will only make our Bitcoin mining business and the margins of that business even stronger once we convert these facilities to HPC. And so that means we have built out one of the largest specialized digital infrastructure practices in North America if we convert all 300 megawatts that we've announced that are planned for conversion. And then we'll still have one of the largest Bitcoin mining businesses in our industry that will actually have a better margin profile than what we have today.
And how does that business work versus Bitcoin, right? Because it's more of akin to the hosting than the self-mining side, but it's very stable as well.
7 to 10 year contracts with some of the largest counterparties in the tech world. And that means we have essentially an investment grade counterparty with an offtake agreement for 7 to 10 years, which means it becomes very easy to model that business line. And that business is mainly driven by them paying for the availability of power each month, not on the total power that's drawn, but for the availability of power. And so from our perspective, that becomes not only an extraordinarily stable business for us, but it also becomes a business model where we are going to be able to tell the market very strong guidance around what the profitability is going to be on a go-forward basis, so that the entire market can understand what our free cash flow generation capabilities are from today through the next 5 years.
Oh my God, you're getting me all excited here. Yeah. So when we're looking out towards that business, people would also come to you all because your experience with building out infrastructure and finding the right locations. Walk us through again. I want to drill deeper on this. How do you find a location, whether it's for your Bitcoin mining business or for your HPC business? Because they aren't always going to be the same location, right? They have different characteristics.
They absolutely have different characteristics. Now, the one competitive advantage that we had was we built out locations for Bitcoin mining according to a traditional data center criteria when we were first building out. So a number of our initial locations, we used the same criteria that Microsoft used to go out and identify where data centers need to be. And so that provides us a massive competitive advantage today when all of these large HPC companies are looking out going, how do we find a site with 100 megawatts of power in one location? Well, all of our sites, or some of our sites, check those boxes. Now, the difference between those sites and what we see on the Bitcoin mining side is, Bitcoin mining, it doesn't matter where you are. You could be anywhere in the world and mine Bitcoin. And what we care about is low-cost power and the ability to lower that power through intermittency. Because our capabilities on the Bitcoin mining side, we can tune up and down machines and turn them on and off within 15 seconds. No one else can compete with that. So that provides us a very strong competitive advantage in the market that just allows us to look anywhere in the world with any power program. and say, yeah, we can do it better than anyone else. And that gives us even better margins at those locations. And so, the way we evaluate Bitcoin mining sites versus HPC, absolutely different criteria. But you take our existing footprint today, which is one of the largest digital infrastructure footprints in North America, and we have a massive opportunity ahead of us to build out one of the largest specialized digital infrastructure companies in North America, while also running one of the largest Bitcoin mining businesses.
Yeah. So remind me, how many people are employed at the company?
We have over 270 employees at the company.
Yeah. It's a big company. Well, relative
majority,
title, it's a big company.
A majority of those are actually located at the facility level, though. So, just given the number of sites that we have, given the fact that we perform our own repairs, we've performed all of those, return analyses to prove that those employees at the data center level are increasing our efficiency in a way that's more profitable than having less people. And so that's what we really like about our business is everything's absolutely tuned in the way a contract manufacturer would tune in their margin profile at a facility level. We've done the same thing for ours.
So just so I'm clear on something, are there opportunities for you to expand internationally? I know you talked about the U.S., but there are major facilities, at least Bitcoin mining facilities that are international as well. Is that part of your strategy, whether it's HPC or Bitcoin mining?
Yeah, it's definitely part of our strategy at some point in the future. We're always running RFPs and evaluating sites internationally. We're always trying to find that piece of power that gives us a competitive advantage that we believe will be a site that's competitive in 2028. So we've been in discussions with a number of different sites internationally that could be present interesting opportunities for us. And so it's not something that we're going to shy away from. Our software allows us to monitor and run machines internationally. Like, that's not our problem. And our ability to produce these lights out facilities gives us an advantage where we don't necessarily have to have people on site every single day. So we can go to pretty remote locations across the globe. And so, yeah, international is definitely an exciting opportunity in the future. But it's something that we have to be very cognizant of the politics, regulations, and what does that local employee base look like? Are there trained employees? Is there enough folks in that area? A great example is you take one of our locations in the United States, it's a population of about 300 people. We employ 30 people at the site, right? And so, if you have that type of concentration, you have to be very cognizant that there are people qualified to operate in those facilities. And so that's another big metric that we look at when we're evaluating international opportunities.
Yeah, and an interesting part, having visited some of the sites, going back to the whole culture thing, you can change, the scope of the town's employment by launching a facility here in the U.S. The same as, maybe you could do that elsewhere. But it's nice to visit the communities as you change them. So Adam, I think we've covered a lot. This has been great. I so look forward to, watching you guys continue to evolve and develop. And I'll be looking at that clock every day and looking forward to your advancements. So, I guess I would end with one random question I tend to ask. Putting Bitcoin mining aside and putting even HPC aside, listen, you're a relatively young guy. I am too, by the way. When you look out 10, 20 years from now, what's your vision for how blockchain has changed different industries? Because, and putting aside the financial services industry, because that's just too easy. You got BlackRock doing what they're doing. What industries are you excited about being changed by blockchain?
It's probably going to be the power industry. People love to talk about financial services, but the power industry is going to change dramatically over the course of the next 20 years. The demand for high power sites to power everything that we do every single day is going to become even more important. what people don't realize is that everything that you use, whether it's software, whether it's the internet, it requires a tremendous amount of compute, but all that has to be powered. And so just the broad compute industry is going to radically change how we source power, how we build new generation, where we build new generation. And that is going to radically change everything going forward. So 20 years from now, you might see a data center hooked up to a small nuclear reactor because that's, some of the cleanest energy in the world. And it's going to provide the opportunity to have very stable uptime to help support the massive applications that we're just seeing the infancy of today. And so, all of that's going to require a tremendous amount of transactions on different types of networks. And I think that's actually something that could be heavily influenced by Bitcoin or other blockchains as well, just in terms of the transactions between the amount of compute that's going to be needed from all different counterparties versus the power, right? It all comes down to the transformation of power into compute. And that is going to be facilitated, I believe, significantly by blockchain in the future.
Adam, thanks so much. Get back to work now. Appreciate the time and look forward to, again, watching your journey. Keep on blocking and tackling. Be well.
Thanks, Dan.
Big stuff.